Good afternoon and welcome to Zimbabwe Daily, a platform where we bring you news and everything that is trending. This is Behind the Mic. My name is Grace Kajge and I'm going to be your host. So today we are going to talk about the implications of the economic measures on the banking sector. So, to those who do not know the issue yet, let me just brief you. The banking sector has banned the lending of money. So, watch this video and get informed.
22. Therefore, with immediate effect, the quarterly reserve money growth will be further reduced to 0% per quarter. Proportion of taxes payable in local currency. Government reaffirms its commitment for exporters to pay more of their taxes in domestic currency. This is currently under review. Tax incentives for using local currency. Government is, with immediate effect, putting in place a differential taxation system for the intermediate money transfer tax, IMTT, as follows. Roman 1, 2% would continue to apply to local currency transfers. And Roman 2, all domestic foreign currency transfers to attract the intermediate monetary transfer tax of 4%. Foreign payments settled through the willing buyer, willing seller, and the foreign exchange auction system shall remain exempt from the IMTT. This is the intermediate money transfer tax. Foreign currency cash withdrawal levy. There is a preference to withdraw foreign currency for transaction purposes, thereby undermining IMTT collections, given that cash withdrawals are not liable to IMTT. In order to discourage the withdrawal of cash which is traded on the parallel market, the cash withdrawal levy for amounts above $1,000 will, with immediate effect, be reviewed from the current 5 cents per transaction to 2%. Settlement of foreign currency tax obligations in local currency, ZIMRA rate. The settlement of the local currency component of the foreign currency tax obligations for duty, royalties, and other tax heads will, with immediate effect, be at the interbank rate established through the willing buyer, willing seller exchange rate system. Similarly, liquidation of the surrender portion of export proceeds will, with immediate effect, be settled at the willing buyer, willing seller exchange rate. Measures to foster market discipline. Suspension of third-party country payment on foreign payments. In order to continue to foster market discipline within the foreign payment, banks shall, with immediate effect, not process third-party country foreign payments. The third-party foreign payments are susceptible to illicit financial flows, which prejudice the country of its hard-earned foreign currency resources. Suspension of lending by banks. In order to minimize the creation of broad money that is prone to abuse for purposes of manipulating the exchange rate for financial gains, and to allow current investigations, lending by banks to both the government and the private sector is hereby suspended with immediate effect until further notice. Fostering discipline on the stock market, the Zimbabwe Stock Exchange. Government has noted regulatory weaknesses in the custodial system of the Zimbabwe Stock Exchange.
Zimbabweans, you have just heard it yourself from the horse's mouth, the president has said. Okay, so today I have a guest with me in the studio. So I will allow the guest to introduce himself. Welcome, sir. Can you please introduce yourself?
Thank you. My name is Shepard Ngandu. I'm the Acting General Secretary of the Zimbabwe Banks and Allied Workers Union.
Okay, thank you so much for joining us at Zimbabwe Daily. We are honored.
My pleasure.
Okay. So we just heard that the president saying that this measure that they have taken was done in order to curb the inflation that was on the rise. So on a personal level, how do you take this measure? How does it affect us as Zimbabweans?
Thank you. So from a perspective of the trade union where I come from, representing workers in the financial services sector and the broader working class in Zimbabwe that finds itself on the receiving end, with respect to a number of policies that are just announced by government without wide consultations, but at the end of the day, will have far-reaching implications. We are coming from a class that is having challenges in terms of our salaries being eroded every day by way of inflation, by way of currency challenges. If you're earning salaries in RTGS, everything else in terms of the shops, the hospitals, the school fees, even transport, is being charged in US dollars. So these policy pronouncements that are made by governments, especially without such consultations, have got far-reaching implications. So zeroing in particularly on this recent pronouncement, you'll find that this is going to affect banks, in so many ways. Banking in its traditional sense is a function of deposits and savings on one hand, and also lending credits and services that may be given by banks. So you find that lending in particular constitute a larger chunk in terms of the business that is undertaken by banks. If you look at the mortgages, for example, your building societies, the microfinance institutions that are in this country, their core business is about lending, though probably to the informal sector or to individuals as it were. But again, this is lending. So suspending...
That's how they make profit, right?
Yes, indeed. So suspending such key operations of banks would have an impact, serious impact in terms of revenue. If you look at the statistics that are given by the central bank, you will see that revenue for financial institutions range from about 20% to around about 50% that comes from lending, that comes from credit, that comes from loans advanced to customers. So it means if you are suspending such core component, such core business, financial institutions, seriously crippling them. And this has got far-reaching implications to the organizations in terms of their sustainability. We have been saddled with retrenchments that have been going on in the financial services sector of recently. Banks have been digitizing and reducing their workforce and restructuring in the process. What is going to happen, obviously, if this goes unchecked for a long time, we're going to see banks coming up with excuses, then embark on full-time retrenchment, and we'll have job losses in an economy where unemployment is on the higher side. So if you look at these measures that have been put in place by government, not only does it have an effect or impact on the going concern or sustainability of the banks or their profitability, but it has got also an impact in terms of the business, that they run, in terms of the credit that they extend to the customers who rely.
At the end of the day, it's a business.
Yes. So the customers of the banks, they rely on this lending for their working capital support. And this working capital support, supports issues like your operations, salary payments. I was talking to one of the bankers quite recently who was telling me that for your own information, some of these companies, they actually borrow this in order to pay salaries. So what this means is that, some workers out there, one way or another, are going to end up without being paid
Without
their
being
salaries
paid.
because these organizations,
And
these
at the
companies,
end of the day, there's going to be retrenchment
retrenchments are going
because they can't carry on being on the debt.
precisely, and obviously because this lending that companies get from the banks, sustain their operations, and it also, supports the entire economy in terms of aggregate demand that will then be going on. But if you then suspend lending, as it were, so it's gonna affect the entire economy. We might end up having shortages of goods and services in the economy, which may then ultimately fuel inflation and also price increases, which will then be unsustainable and got far-reaching implications to the general citizen, and everyone will suffer at the end of the day.
Okay, so here Shepard is saying that the measure has a very big impact on the banks at large because banks normally they are used to mortgage things. They are not going to be able to pay some of their employees, and this is going to result in retrenchment. People are going to suffer and suffer more. We are trying here to solve the economy. We are trying to serve the majority populace of Zimbabwe. But what the situation currently is does not seem to be addressing the problems of their fellow Zimbabweans. So, say, can you please just tell us how is it you have explained to us how it's going to affect the bank. So how then does it also affect the worker? Because some of the workers, they are sustained, they set their bills, they settle their bills using those debts. You see, we can actually refer to the school fees increment. Some of the people were actually hoping that they're going to take loans from the bank, and that dream has been shattered. How is it going to affect the workers?
Indeed, you are quite right there. The generality of the workforce in Zimbabwe, who, like I've said before, are paid primarily in RTGS. They depend on these loans for them to supplement or complement their meager salaries. So they rely on such salaries for them to meet their day-to-day expenses. If you look at the issues of school fees, for example, school fees that have been increased in most schools, and in some instances being paid in US dollars, which means you want to have your small salary that is in RTGS, you go and use it to buy US dollars,
Yeah,
which you
you
then,
convert it.
yes. But again, because the salaries are not enough, you then want to have those loans to support such meager salaries. In addition to that, some would be having their medical bills that they would want to settle. So this policy has got an effect where people will not be able to meet their medical obligations, and it has got far-reaching implications, in our view.
Okay. Feel free to join this conversation. We have a comment section. You can just drop in your comment and we engaged. Bring your ideas, bring them to the table so that we can discuss. If you come together as Zimbabweans, we can come up with a better decision. Feel free to join the conversation. Okay. So here we just seen that the measures that were taken, it's going to affect almost everyone. So, Mr. Ngandu, I just want to ask you, since the measures were announced, has they solved any economic challenges? And if so, to what extent? Because they are trying to solve the inflation. They're saying that the inflation is going up. So have they reached their goal? Or is it in process? Or I don't know anything.
So you are quite right on that one. The danger is if you prescribe the wrong medicine, without getting proper diagnostics, there are probably serious consequences that may arise. The problem that we are seeing in the economy or in this country is where our government is reactionary. They resort to these knee-jerk policy pronouncements, and then it has unintended consequences, as it were. It is blamed that it is is lending that is causing these runaway rates in terms of foreign currency on the parallel market. But the argument out there, in the streets, is that the biggest players or the biggest consumers, there's the ones who are given government contracts, those that are, carrying on the construction of government projects, construction of roads, and so
That's
forth.
right.
When they are paid their monies, which are usually in large trunks, they are the ones when they go buying foreign currency on the market, they'll be just giving the highest rates, so to speak. So there is no doubt in terms of the general populace out there who is fueling that particular inflation. They know it, who is fueling those currency problems in terms of the increases that is going there. The small loans that consumers, you and I take, has got no effect, so to speak.
Because some of the banks, they actually use, they calculate the amount of the loan that they give you using your net salary.
Precisely.
And it's actually very small.
Precisely. Actually, the amounts, the consumer loans that we take, are almost negligible. And now they're talking about coming up with lists and so forth, but they always have their surveillance that they have, the financial intelligence unit and so forth. They've always been talking about these lists, talking about publicizing whosoever is abusing the foreign currency system. But they've never gone to the extent of then publicizing those, because those are their cronies, those are their friends, they are connected to the elites at the end of the day. But who is suffering? You find that you and I are the ones that are suffering. Business, they're the ones that are suffering at the end of the day. So to answer your question with precision, we are in a sort of like in a panic mode, agents meetings are being held as we speak between the authorities, RBZ, the banks, and so forth. We've also written to the Minister of Finance expressing our displeasure in the manner in which this policy was pronounced and the possible effects that it may have to us as workers. So we've got meetings that are lined up to have discussions over this issue. But what is supposed to happen is that we're supposed to have discussions, dialogue over these whole issues, because that's what dialogue is all about. And if you look at government, labor, and business, they've got platforms, over which they're supposed to dialogue before such policies are pronounced. But unfortunately, at times we just then reacting to situations, chasing, and at the end of the day, there is no winner. The generality of us as citizens will then become losers.
You've actually bring me to my next question. So what are the legal implications? Because we can see that some of the stakeholders, they are saying that the situation or the measures that were taken, they are unlawful.
Precisely, those are the challenges that we have for coming up with such policies without the wider consultations. Had there been wider consultations with all stakeholders that are concerned, then they would have plugged all the necessary loopholes to ensure that there is sufficient legal backing to support whatever it is that they are doing. Because as we speak, there is no relevant, according to my knowledge, at least up to now before this interview, there is no statutory instrument or any legal instrument that is supporting whatever it is that the government has done. So in a way, in a sense, it is unlawful, so to speak, whatever it is that the government has done, unless they then come up with the necessary interventions. But even if, assuming they are going to come up with the necessary intervention, come up with a legal instrument to support such, is it a just law? Is it fair? Fair to the consumers, fair to the business community, in line with their policies. They are saying they are open for business, their mantra that they are running with. But at the end of the day, whatever it is that they're doing in the interim goes against the policies that they are speaking for, because this is actually stifle business operation in the economy, and everyone will lose at the end of the day.
Perhaps they didn't feel the need, because recently I was actually reading something on internet. The governor, John Mangujka, was saying that the measures were just temporary.
Yeah, fortunately, I received a call from him yesterday pertaining to the letter that we wrote to him. He was expressing the same, to say, these are just for a short period of time. But how short is short? You know,
Exactly.
is it a week? Is it a month?
And how sure
Because,
are you that this period of time the problems will then be solved?
you know, those are the issues at the end of the day. They are prescribing this option, but are they really sure that at the end of the day they would have solved all our currency problems? And if you look at it, you know, they continue to have their auction system. Quite recently, you know, it was at 173. And whereas on the willing buyer, willing seller market, it's around 275. So, but you have seen that, you know, government operations are now being supported using the willing buyer, willing seller rate. So why then do we continue with this auction system? Because this auction system create arbitrage opportunities, particularly to those that are connected to the elites. They are cronies because they are the ones that have got easy access to such foreign currency. You and I, you know, we cannot be able to access such foreign currency. I, for one, you know, working in the financial industry, but I find it difficult to access even that mere $50 that was being offered not so long ago. Yeah, I found it difficult to even access that particular $50. And even this willing buyer, willing seller, and so forth. It's not easy to access that foreign currency because any rational seller out there would rather go and sell on the alternative market, which gives higher rates, so to speak. So unless if they then converge, bridge these and have one operating rate, which is acceptable to all stakeholders at the end of the day, acceptable to the sellers, acceptable to the buyers, acceptable to the business, and we then run with that. That would be a situation that is desirable rather than the current scenario where you have got multiple sort of rates which are creating arbitrage, benefiting only a few.
Okay, so when the video was being played, I actually quoted the president. He said that the third-party foreign payment are susceptible to illicit financial flow in which prejudice the country of its hard-earned foreign currency. Can you at least just comment on that? Then the issue of the intermediate money transfer, the taxes.
Thank you. On the issue of the third-party transactions, from a personal point of view, I think they are quite right on that one, in the sense that third-party transactions, in their very nature, it is like you have received a foreign payment invoice, which you want to make. Then you use my account to pay on your behalf. There is a risk there in that there may be illicit financial flows that may occur through such processes, and it poses also risks in the process. So there is need to then manage that. My personal thinking was that there is no such thing because it creates a lot of risk. But then coming to the issue of the taxes that have been put in place by the government, particularly on the foreign transactions, the tax. Of course, you know, you recall even when the 2% tax was introduced, there was a far cry in the economy because it has got an effect in increasing the cost of doing business and hence the prices of goods and services. So invariably, even these taxes that are being introduced by the government, again, of course, government will benefit by way of the taxes that they will that they will get. Exactly. But on the other side, they will then be limiting the number of players that will then operate in the formal banking system, as more and more players will then opt to use the non-formal systems where they are not charged. So those are the downside and some of the challenges that are going to be seen in terms of these policy pronouncements that have been put in place. There is another tax again for those that are withdrawing US dollars in excess of 1,000. Again, this will sort of like push those that have got accounts to, in one way or another, try and avoid the formal banking systems. So if many players avoid the formal banking systems and then they want to do informal banking, then it means that the business, banking business in relation to such foreign transaction is going to be reduced, thereby reducing the revenue and income that the banks were making from these transactions. Again, the challenge, like I've said, is that government is just coming up with some of these policy pronouncements without wider consultations. Exactly. If they would have consulted wide enough the all the stakeholders, be it the banks themselves, the consumers, the stakeholders, even at the provided social dialogue platforms, then they would have received responses from all over, and then they would take the best possible routes, or even in some cases reduce that tax if at all it made sense to be imposed. How do you certainly you were charging a small fee, probably 5 cents or so, and then you want to charge 4%? That's a huge amount of money.
Huge amount.
Because even banks themselves, in terms of the commissions that they've been charging on foreign transactions, it's not as high as 4%. So it means government is being punitive, in those that are carrying on formal business transactions, particularly these foreign currencies. Whereas then consumers will then go to the informal system at the detriment now of the entire economic system.
Okay. So when the 2% tax was introduced, there was cry. There were cries all over. People of Zimbabwe were saying that it's actually a burden on them since they were actually struggling. They were currently struggling. But right now, there is a 4% increment. How are they going to sustain themselves? This is a discussion that we are talking today. How are we as Zimbabwe supposed to cope? Mr. Shepard here is saying that if the government had made platforms for discussion, have bring people together from different sectors to discuss, to put the issue on the table and discuss the matter at hand, they would have come up with a possible solution that was going to help each and everyone, both the receiving end and the government. So, thank you so much for joining us today, and we just want probably the way forward in this situation, and your message to the Zimbabweans, the bank, the stakeholders. Your last words as we round up.
Yeah, I am a firm believer of social dialogue. I'm a firm believer in stakeholders or parties coming together, dialogue, talk. We may not necessarily agree, but we should be able to come up with a compromise and have something that we should be able to own up. Because if you look at it, those are the challenges that we're having in this economy, where at the end of the day, people will ask. I saw one of these days, even Comrade Mutsvangwa was speaking to say there are lots of US dollars that are coming into this economy. So much US dollars, better than better performing economies like Kenya, for example. Why is it that in this country, despite such inflow of foreign currency, we continue to cry, failing to meet our basic necessities as a country? But all those issues show that there is something wrong somewhere, which then calls for dialogue, between the various stakeholders, the various economic agents, government on the other hand, business, labor, the various social stakeholders that are there in the economy, so that we dialogue and try and find solution to our problems. But the challenge that we have is that you just hear pronouncements overnight and so forth, but such pronouncements will then end up affecting everybody in the economy. So going forward, government should sit together with business, sit together with us as labor. We also input into whatever it is that they'll be doing. And again, whatever suspension that has been done has to be reversed with immediate effect, because it has got far-reaching consequences. Everyone is crying out there. No one is spared. So there's need to then probably give this a short time frame and then suspend it going forward. But again, the issue of dialogue should be at the center of everyone, be it government, business, and us as labor. And we should be able to negotiate in good faith. The challenge that we are seeing is that there is bad faith negotiation, where we seem to be going in one direction, and one is indicating right or indicating left. At the end of the day, we'll be in stagnation. We don't know whether we should proceed or not. So those are the challenges, but that can only be resolved through dialogue.
Okay. Almost everyone is suffering. We have heard on the bank side, they are also suffering. There are high impact that are going to affect the Zimbabweans. On the workers' side, they are also suffering. So it is very crucial for the government, for those in power, to reverse whatever measures that they have done and come to a table to discuss with the labor, to discuss with the bank, to discuss with everyone so that they can put their ideas together and make a viable solution. Thank you so much for watching. This is Zimbabwe Daily, and the show is Behind the Mic. Join again next time. Thank you.